Welcome to my channel. I'm Scott. In this video, I'm going to walk you through the process of valuing US food stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 13 billion market cap. They're trading at $52 a share and they have 244 million shares outstanding. This company markets, sells, and distributes fresh, frozen, dry food, and non-food products to various companies in the food service industry. And they mainly sell in the US. The company's customers include independently owned single and multi-unit restaurants, regional concepts, national restaurant chains, hospitals, nursing homes, hotels, motels, country clubs, government agencies, the military, colleges, and retail locations. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video, and free cash flow is cash flow from operations minus capital expenditures. Look how much their free cash flow grew. In 2021, 145 million, half a billion in 2022. That's nearly 250% growth. Then up another 66% into 2023, over 800 million. Now it's 750 million in the trailing 12 months. Still pretty thin margins, only 2% free cash flow margin. Net income is the profit or loss on the income statement. It's revenue minus expenses. That also grows each year from 160 million to 520 million. Revenue is the sales for the company, and that has a steady growth from 30 billion to 37 billion. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's 15 billion. We discounted those numbers back to today using a weighted average cost of capital. We get a value of the company of $12.8 billion. We divide that by 244 million shares. And we get a calculated stock price of $53. They're trading at $52, so they're trading at a 1% discount. It's a small buy according to the model. Do you think it's a buy or sell? Let me know in the comments. There are 14 companies in the same industry as US Foods, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spent $347 million in CapEx. These are the investments in property, plant, and equipment. Debt to equity ratio is 1. For every dollar of equity, they have $1 of debt. They do not pay a dividend. The third highest free cash flow, $750 million. They rank second in market cap, $12.7 billion. Price to book is a little better than the average. Their PE is a little worse than the average. Really good price to free cash flow. They're trading at 17 times free cash flow. Better than Cisco, not as good as Performance. An attractive price to sales ratio. If a company had a price to sales exactly 0.333, then their revenue would be triple their market cap. They're almost triple their market cap. So that means their price to sales is probably like a 0.34. And their 5-year annual revenue growth rate is only 8%, which is worse than the median average. Look at HF, they're at 32%. Two companies are negative, and if it says NA, that just means the company has not been public for 5 years, so we can't look at this number. Here's their latest income statement. Revenue is up nicely from 9 billion to 9.7 billion. COGS is 8 billion. These are all the expenses directly tied to generating the revenue. Revenue minus cost of revenue gives you your gross profit, 1.7 billion, up a little from last year. Operating expenses, 1.4 billion. They spent 81 million of interest on their debt, which is pretty similar to last year. So their net income, 198 million. That's about 5% higher from last year. EPS of 81 cents, up from 76 cents. And they are adding shares. Last year, 238 million, now it's 246 million. So they added 8 million shares, which is about 3% more. So you don't like to see much dilution, but if their revenue and profit growth goes up more than the dilution, then it's fine. So to summarize, I have them trading at a 1% discount. They're pretty much trading at intrinsic value. I ranked them 5 out of 10. Would I buy? I'm not too sure, so I gave a 5 out of 10. Ratio is also 5 out of 10. They're about average. Financials, I gave them 8 out of 10, just because their free cash flow has grown so much, up 400% from 2021. Revenue is not up as much, but that's fine. It is up, and profits are up even more. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking the link in the description below. Thanks for watching.